We know this year, and actually in the last couple of weeks, we saw investors chasing yield, but then having a change of heart. And I'm talking specifically about high yield overall, which has seen some outflows from funds. Certainly, Puerto Rico is a high yield municipal credit. Do you avoid high yield muni bonds right now, in addition to what we're seeing with the overall market now adding Puerto Rico into the mix?
Yeah, great question. At BlackRock, we manage money across the entire yield curve and credit spectrum. So we don't avoid high yield, but we do limit high yield in certain instances. And as you allude to, the high yield sector can be quite volatile in municipal bonds. And if you think about why, it's not a very diversified portion of our market. About 50% of the high yield market today is made up of Puerto Rico and tobacco bonds, which have both seen their fundamentals deteriorate in recent years and more particularly in recent months when it comes to Puerto Rico. So while we believe the headlines will drive the overall returns in the high yield space, there are still some opportunities there, but it's important to be prudent about the amount that you allocate to high yield municipal bonds at this time.
One reason we have seen throughout the year such interest in Puerto Rico debt is that the debt is triple tax free. Do you see a space within municipal bonds where investors might gravitate to? Very hard, obviously, to find that very sort of special factor that you get with a Puerto Rico debt. When somebody is trying to shield some of the taxes, is there an acceptable alternative?
There is. If you think about what got Puerto Rico into the situation that it is today, which is ultimately an over-levered economy, it's the fact that they have benefited from having the triple tax exemption and an investment grade rating. Now that that investment grade rating has gone away, it will leave investors looking for a replacement or a surrogate. And what we've seen is some investors have gone into other sectors within the high yield space, and in particular into tobacco bonds. But as you mentioned, the benefit of the tax exemption is greater today than it has been in any recent time. So we do feel as though the demand will continue within the market for more tax exempt income.